Hey everybody, John Duncan here. I know everybody's a little panicked and freaked out over the stock market. I just want to talk about some lessons that I've learned in trading and so forth in the stock market with all this uncertainty. And what I've found is 13 different lessons that I've learned just in the last few weeks. And, I've been in the financial business for 30 years. So this is like new to me, some of the things that I came across. I knew kind of had how do I want to say, an inkling on some of these, but this really exposed, how the system is today. It's different than it's ever been. Okay, with that, number one, the market, the stock market, the whole world in the stock market is basically run by supercomputers. It's causing crazy opening and closing bells. So as it starts, you've got all this trading going on before overnight, and that's loading up. And then algorithms are basically triggering buys and sells. They program the algorithm, but those are, set up typically for normal times, not when it's like a free for all. And along with the markets now run by supercomputers, the sheer volume of transactions that can happen in a fraction of a second is off the charts. Number two, margin calls are behind a lot of what's happening at the end of these days on sell-offs. There's a lot. I mean, this is something that's interesting, but you wouldn't believe how many are trading on leverage, and it's not just people; it's institutions. And so at the end of the day, when we're free falling, they're having to cover those positions because those margins get called. Okay, number three, something that it's exposed worldwide is that the whole world, consumers, companies, and countries are mortgaged to the hilt. I don't know if you saw, but there's some of these countries can't even make it like a week or two without some sort of funding, including America's having a lot of problems. I just saw a report right before I jumped on here that just in the treasury market, the next 2 days, they're going to pump $1.5 trillion into the market just so that it can flow because interest rates are buried. It's some crazy stuff going on. So the world, number three, the world is mortgaged to hell. Number four, governments, this is one point, they're willing to print and spend money like never before. This isn't 2008 and 9 where they're debating it. They've already got it. They're ready to keep everything liquid as far as it can go. Number five, governments, and I've been saying this for 6 months, maybe longer, they want the interest rates at zero or lower. I mean, they just do. There's so much debt in the world right now, and they're the worst of all when it comes to debt. And I'm not talking just America, just look at all the debt in all the countries. So they're wanting to drive the interest rates down. And so this is just another opportunity to do that. Number six, the system, the whole economic system is fragile AF. It's a literal house of cards that was created. It's created. It's just a house of cards. It's not backed by gold. It's not backed by things. It's a house of cards. Number seven, money flows in and out, and that's what causes the value change. Now, I've known this, but it's never been more apparent than it is in the last week or so. It's like a balloon. Blow air in, money comes in from safe positions, and then we get scared again, it goes back out. When people say, there was X amount of dollars lost in the market, it really wasn't. It's just you have a holding, and so say the value goes down and you own 100 shares. You still own 100 shares. It's just the value of those shares. There's not as many people in the market. The value drops down. The money disappeared to somewhere else, into bonds or into cash or whatever. but you're still in it. You still have, it's like a house value. The only difference is that when it comes to the market, you can see it every second how much it's worth. Number 8, some are making a fortune on this whipsaw that's happening every day, where we're way up, way down. And that the issue with that is number 9, day traders are going to get sucked back in, and most will go broke trying to do it, because it's, unless you've got some information that no one else has. I mean, the crystal ball effect, you cannot outguess it. I'm telling you right now. Number 10, and this is the first time in my entire career in 30 years, it feels more like gambling anymore than investing, because of a lot of what I'm talking about. It's gambling. Now, it has its place, but you got to understand, it's like gambling. Like, you wouldn't walk into Vegas with like your entire life savings. Well, the markets are proving through this coronavirus, they're all over the place. Like, you could be up, down, sideways, and there it is. Number 11, what we're all realizing is how little control we have over any of the financial system, other than we make our choices and hope things work out. And that, it's probably always been like that, but this is like exposing that like crazy. Number 12, shorting and leverage are amplifying the results in both directions. It's almost like nobody's satisfied with just an investment anymore and see where it goes. Now it's leveraged up, and then the first sign of it going down, short it. I mean, this goes back to this supercomputers and trying to blow out the returns. Number 13, overnight trading is out. I've never seen it like this before. Like, every day, it's a log jam first thing in the morning. And that is really, like, this morning, they had to shut the market down like right after it started. Like, within minutes, it was already shut down for 15 minutes because of all the overnight trades that have been put in. And so it's just something in a normal market flow, you don't see all that going on. So basically, moving forward, one of two outcomes is going to occur. Either A, the whole system just blows up, like they just go too far. That is so unlikely. Why? Because it's fictitious anyway. None of us want to think that, but money is virtual. It's a virtual virtual means of transaction, and it's made up by the government. And as long as we all believe in it, so they can keep the numbers moving. Could they explode and be done? Yeah, they could, but really in 2008, that would have happened, 2009. And really, it already has happened. It's just at this point, like, we just realize it's just virtual money. I mean, it doesn't feel virtual when we're in the market and we see our values going down. I get that. But it is virtual, and it is, the system is what it is. Or number 2, so the worst is they just blow it up and we have to restart a monetary system. Or number 2, this will pass like everything else has. The market will come back, but it'll actually be a little better, because every time it falls, a lot of the sins that is, committed, because as when markets are good, we've been riding a bull market forever. A lot of sins stuff that shouldn't be in there is in there. And so a lot of that gets kicked out on moments like this. I will say this, the level of sophistication of the world markets is as impressive as ever. It's like beyond impressive that as a world, we can buy, sell, and trade all day long on this mechanism. The fact that this is a man-made financial machine that continues to evolve beyond the wildest dreams of anybody who created the functions of Wall Street, and regardless of how many derivatives and algorithms that they program and buy and sell, it's still functioning. And now the summary of all this is that this coronavirus is really, if you weren't thinking this way, it's really exposed. From now on, it's going to be super high speed, super high volume, massive highs and lows, and hyper fast news based investing and trading. And this is like the new normal. Like, this is the way it is. So, the market is not the only place to put money. It's not. It should be a piece of money, not all your money. And if you're like crazy, can't sleep, that type of thing, then don't be in it at all. But there are a lot. The final thing I'll say on this is there are a lot of mechanisms that you can put, such as limit how far it would drop. You can put limit orders and buys and sells. There's all kinds of crazy new things that they've just, in the last 20, 30 years, every few years, it just gets better and better as protections you can build in, but it's still a market. And the coronavirus, because it's such a global, like phenomenon almost, we don't know if it's going to get really bad. We don't know if it'll just pass and we'll be fine. Nobody knows. So the markets don't know how to react. And now you've got all these super fast computers that can trade at the speed of light. And so you see the market's just way up, way down, way up, way down. So anyway, that is where we're at today. And we will get through this. And, it's another learning experience on the market. So with that, I wish you well. Stay safe. I'll see you soon.